Good morning, good morning, good morning, good morning, good morning, guys. My name is Sean Dex, and I welcome you back to the Mango Grow for your daily Bitcoin and market analysis. The markets are down, the markets are ugly. Everyone's wondering, should they be rushing into USDT or should they be longing BTC? But don't you worry, Mango's here to keep it easy. Mango's here to keep it stress-free. Oh my God, I literally just made all of that up on the spot. What am I doing? Let's just get started. It's an exciting time. I do have to give you guys a forewarning though. I'm a bit tired today. I'm actually exhausted. I was out all night meeting friends that I've not met in a very, very long time. And I'm going to try to do my best today. I actually was so close to not doing a vid at all today, but hey, the markets do not wait for us. The crypto markets do not wait for anyone, and we have exciting things going on over here. Yes, the scenes are ugly across the board, but I think this is where the opportunity lies for the high time frame traders who are patient enough to wait for this opportunity. If you guys do remember, it was only last week where I mentioned on Discord, rather I started the morning off on Discord saying, good morning, good morning, good morning, Mongolians. I've taken profits on bounces this morning and I've reduced position sizes, risk off mode for a bit. And now I get to take that risk and put it back into the market, which is why I'm a bit excited, right? Because I have all of this reserves sitting on the sidelines that I get to redeploy at these discounted prices. The way I look at it at the very least is that we are still in that rising bull market phase. And at these levels over here, guys, especially Bitcoin, it's going to be very, very easy to manage our risk. So I did say this on the Discord, right? These are the kind of things I don't usually say on the daily video. So if you guys are not in the Discord, make sure you guys do join, take part in the conversations, take part in the discussions and the brainstorming sessions, and you guys will be rewarded. The Discord is currently open to everyone while we are still in this phase of the market, right? We do close out our Discord when the markets get a tad bit too crazy, so don't wait for then. Don't wait to, one, join the community when the markets are crazy because you won't be able to, and two, don't wait to learn, guys, when the markets are crazy because there's nothing to learn when the markets are crazy. You're just going to end up getting dumped on by everyone else who put in the hard work during this phase of the market. So yeah, you guys can join us at themangoway.com/discord, right? That's essentially a short link to this is the public chat, guys. I said this in the public chat. I literally told you guys what I'm doing. I'm taking profits on my positions and I'm reducing position sizes. That's key, by the way. I did not say, hey guys, I'm taking all my positions off. I think this is going to be the pullback for sure. No, I wasn't sure. You can never have certainty, right? Which is why I only reduced position sizes and I did not take everything off the table. And yes, some of my altcoins took a beating. In fact, it was just a couple of days after, or maybe a day right after that I added to one of my altcoin position, or rather I added a new altcoin position, Sand, right? And that took a beating, right? That's down like around 15% or 10 to 15%, I'm not sure. But one of my other positions, a bigger position that I've been building for a while, BGB, right, is up I think 110% now, right? We got in at around 18 cents and now it's sitting at around 39 to 40 cents. Now, this is not an endorsement to buy BGB. I'm not saying buy over here. This is another chart, by the way, which I was consistently posting on our Discord for a very long time, right? It was on the weekly time frame, a high time frame trade. If you guys go and look at the chart right now, it's a big parabolic move, a big freaking green candle. So you should not be buying into this. The days leading into the move, I was posting the chart pretty consistently on the Grove, on the public chat on Discord, saying, hey guys, this chart looks fantastic. This chart looks fantastic, right? I'm building a position. These are the kind of things that I will not come out over here and talk about on the daily videos. And I will never ever tell you guys to, hey, you guys should definitely buy this coin. I'll just show you guys what I'm looking at, what I think is looking really, really, really good, and how I will be positioning myself, right? But I will tell you guys this. Do not think that buying at this kind of breakout when an asset that has moved already 100% into a blue sky breakout is a safe trade, an easy trade to manage, okay? It's not going to be an easy trade to manage if you do want to get into this one, which I do not recommend getting into, because you will be getting into a trade where there are traders like me and many others in the Mango seed community and the Mango Growth community who are already upwards of 100% on their trade. Where am I going with all of this? My point is that we keep exposure open because you don't know which one of your coins is going to have a big move, right? Sand is down around 15%, but my BGB trade is up around 110%, right? If I had exited all my trades, I would have missed out on this big win over here on BGB, but I would have also avoided this drawdown over here, right? My point is, in this phase of the market, guys, you're not going to win on all your trades, right? When you're setting up multiple trades, you need to be able to set it up in a way that, one, if volatility hits the markets and everything goes down at the same time, you're going to be in a fine position to be able to deal with the volatility and reposition, reshuffle, take your losses, etc., etc. And two, you want to keep exposure at this phase of the market, provided that you believe in the thesis, right? The thesis is that we are in a rising bull stage right now. The rising bull stage allows you to capture asymmetric wins, right? Trending wins where coins move 100%, 200%, at least 50% of their support regions, right? And that's what we're seeing at the moment. So you need to be able to deal with the volatility of around 15% to 20%, right? You cannot go 5x leverage when a coin can dump 20%, because 20% jump on a 5x leverage is you getting liquidated on your account, right? So you need to be able to deal with that volatility, which is why, again, if you guys are in the Mango Seed program, do not freaking get lazy. Just use your MRM risk management tool with your tool sheet and put on your position sizes accordingly, and you will be fine. Just follow the goddamn rules. Do not be lazy. Every freaking trade I start with, every goddamn trade I start with, starts with the MRM tool sheet and indicator, because it protects me psychologically as well as from moves like sand, right? And allows me to capture big upsides like moves on BGB. If you guys go ahead and back test it on BGB before the big move, you will see that it made me take a big position on BGB. I was talking to Mark about this, right? Because the volatility on BGB before the move was so goddamn low, the indicator took that into consideration and allowed me to put on a big position size, right? Because my position size, by the way, are not static. I don't take a static position size based on my entire portfolio. Each position is based on the particular asset, and that is actually derived from the Mango risk management indicator and tool sheet, right? So the tool sheet made me take a big position size. I'm like, man, really? That big of a position size? It is what it is though, right? If it's allowing me to do so, I'll gladly do it, right? As long as I get to follow my rules and take a big position size, I will do so. So now that big win is very juicy, and you guys can hear the excitement in my voice at the moment, especially since now I do have capital to deploy into these pullbacks. Let's just go ahead and erase all of this now, guys. Give me a second. Alrighty, that should be good. In fact, let's go ahead and erase this right over here too. Okay, so what we're looking at now, or rather, let's start with the Bitcoin volatility and trend profile on the dashboard. Over here, we have the 4-hour time frame. We have the 12-hour, we have the daily, and I also have the weekly for you guys right over here today. Okay, so now, if you guys notice, across the low to mid time frames, right, leading up to the daily, it's a pretty ugly profile, right? We have short trend, neutral on the 12-hour, and high volatility on the 12-hour as well. Low wall on the 4-hour, but pretty high wall on the daily as well. So when you look at this across these time frames, it's not the best picture. It's not very confidence inducing. But when you take a look at the higher time frame picture, right, the weekly, that is still long. It flipped long 14 days ago. Okay, keep that in mind. 14 days ago, we got our impulsive move, right? Impulsive move off the lows. Now, we've been talking about this for a while. When you get your higher time frame impulsive move, the lower time frames go into a consolidation / downtrend, and that forms the basis of your bull flag, okay? Or that's what we are playing for, right? For higher time frame continuation of the trend. Now, I want to emphasize this. This is provided that you are looking for a continuation of the higher time frame trend. If your thesis is that the higher time frame puts in a local high, then puts in a higher low, and then sees continuation, then this is exactly what you want. You want a pullback on the lower time frames to mid time frames, drawing down into your higher time frame support, and then you want your higher time frame to step in right over there and then push price up. Now, the big question trend traders are faced with at all times, okay, this is one of the biggest struggles, is how low does this lower time frame push price down? Where does this stop, right? Where does this stop? Because if the lower time frames are in a downtrend, you expect support levels to break, right? This is the basics of support and resistance combined with trend analysis trading, guys. In an uptrend, you expect resistance levels to break. In a downtrend, you expect support levels to break. If the lower time frames are in a downtrend, you are expecting them to break all of their support levels, right? So the lower time frames are in a downtrend. In this little bull flag here, how low do we go? Well, the high time frame is now in an uptrend in your thesis, correct? If the high time frame is in an uptrend, like we have on the weekly, then you can look towards your higher time frame support levels to hold. Remember, if the high time frames are in an uptrend, you look for resistance to break and support to hold. So where is our big support levels on our high time frames? Because remember, high time frame weekly is now officially long, right? The monthly has a support level that we talked about just 2 weeks ago when we opened up this monthly candle of Feb, right? Let me actually go up to that those slides, that presentation, because since I have everything dated, it's easy to find. Right over here, 1st of Feb. Let's scroll up. Okay, right over here. 1st of Feb, right? We presented this to you guys. We had just opened up the monthly candle. And what did I tell you guys? We claimed the 10 SMA. That was the foundation of this thesis, right? Of this presentation. That we claimed the 10 SMA, but guys, we should expect it to retest the 10 SMA. You guys can see all of my pointers right over there. I pointed to the 10 SMA saying that expect that retest. The new 10 SMA is currently sitting at around 21,502, right? But that's going to move down and up as the month unfolds, right? So it was around $500 away at the time, and we were expecting it to move a little bit lower and then upwards, provided we close monthly candles above the 10 SMA, right? Now, that's precisely, if you guys go ahead and look at the price action, that's precisely what has happened thus far. I believe the monthly 10 SMA is currently sitting at around 21,400-ish, right? And Bitcoin has put in a low somewhere around there, a local low. We don't know for sure yet. Our thesis is that we want this to hold the 10 SMA, and if this loses the 10 SMA, then we can look for consolidation underneath these levels over here, right? But as long as this month is still unfolding, we are going to be looking for that 10 SMA to hold. Much like over here, guys, all the way back in 2021, December, right? I was like, guys, all I want for Christmas is for the 10 SMA to hold. If it doesn't, then we're going to look for that move towards the 21 EMA on the monthly level, the 21 EMA Kijun Tenkin combo right over there. And that's exactly what happened back then too. It took a lot of weeks to unfold because it's a monthly time frame, right? But as soon as we got that close underneath the 10 SMA, our bullishness evaporated. It's always if this, then that, right, guys? And you keep your trading that simple. You keep your trading that mango. And at the moment, guys, we have the opposite of the scenario where we have claimed the 10 SMA on the previous candle, and we're looking for it to hold the 10 SMA on this candle. If we hold the 10 SMA on this candle, then we're going to look for the move towards the 21 EMA. That's exactly what we talked about just 2 weeks ago. Just 2 weeks ago. It feels like a very, very long time now, doesn't it? Right? Because that's how crypto moves. And because of that, precisely because of that, everyone loses out on the easy trades because they forget. So much happens in the interim that they forget the higher time frame plans. But this time around, in this cycle, I'm going to pound it into your heads. I'm going to keep bringing it up over and over and over again so you guys do not forget. And what we are not going to forget this time, guys, is the monthly 10 SMA is under us at the moment. We are using it as support. And until the monthly closes underneath, we are not going to get bearish. As soon as the monthly is lost, we will flip. We're like, all right, guys, that's it. It is what it is. Our first target was always around $24,000, right? We were looking for that weekly move of our cascading pattern, $24,000, and we hit that. Our second target is all the way up to $42,000. That doesn't mean it needs to come to fruition just because our first target hit, right? There's a lot that needs to unfold between target 1 and target 2. And if things go wrong between then, I'm not going to stay stubborn and look for target 2. If things go wrong, I'm going to switch my opinion, right? And if you guys don't like that, well, you guys are on the wrong channel, right? I reserve my right to switch my goddamn opinion as I freaking please, okay? And if you guys want to be successful at trading, you guys need to be that way too. You guys need to be able to change your opinion as soon as you guys are presented with new information, right? Strong opinions, loosely held, and that loosely held does not come from you being scared of the market. That loosely held bit comes from you being invalidated on things going a certain way towards your target, right? At the moment though, things are still fine. We expected this move. Think about it, guys. 1st of Feb, we marked all of this out, right? This is why this new presentation technique is going to be really, really helpful, because I don't need to go back to videos and say, hey guys, I talked about X, Y, Z, blah, blah, blah. No, I'll just pull up the slide and show you guys what we talked about, right? So yeah, we talked about this. We're here now. How does it unfold? We're yet to see. I'm expecting or looking forward to Bitcoin to bounce over here. If we are disappointed, so be it. Let's hope that Bitcoin does not disappoint at the moment, because I will be deploying, right? So all of those funds, right, that I pulled out of my altcoins, I'm very, very tempted at the moment to put into Bitcoin temporarily at the very least, capture some Bitcoin upside, and then rotate back into altcoins. I'm going to think about that. And the reason I'm thinking about doing this, by the way, guys, is because of a chart I'm going to show you guys on the low to mid time frames that I'm noticing on Bitcoin. Yeah, that's Bitcoin. We have a ugly profile on the low time frames, but the weekly to long monthly, we do have support, right? And we have something interesting going on the charts as well on the low time frames that I'll be coming back into. I do want to quickly talk about this tweet that I posted just this weekend. By the way, you guys can follow me on Twitter at Sean Dexter, right? So go ahead and follow me, because I have started posting a lot more often, and there is going to be a lot of trading psychology and just investing and in the crypto markets kind of alpha that you guys otherwise will not be hearing on crypto Twitter, because everybody just wants to dump their bags on you. Anyways, what I did mention, and I want to emphasize this point over here on today's video, is that the early stages of a rising bull market is usually the most difficult. You're always going to feel that nagging doubt of whether or not this is all just a bear market rally. That nagging doubt that you're just getting lured into a trade just to get dumped on. And that nagging doubt, guys, that nagging doubt is precisely the price you are paying to capture the asymmetric upside. Because, guys, by the time you are fully confident that this is a bull market and that you should be buying every single dip, and when you feel good about buying every dip, by that point, most of the upside, most of the asymmetric upside has already gone. It has already evaporated and disappeared, right? You're going to look back at your best trades, and if you look back at them, you're going to realize that most of your best trades have come from when you felt uncomfortable about putting on the trade, but your rules forced you to put on the trade. Those trades are the trades where traders make the most money, okay? Where you're in a constant state of discomfort, but you're following your rules, right? Constant state of discomfort, but following your rules. It's not comfortable to be putting on these trades. It's not comfortable, guys, right? But I'm following my rules, and because I'm uncomfortable and I'm aware of the risk, I have my invalidation. I'm always keeping an eye on my invalidation, because I know that, hey, if I'm wrong, I can get out. But the spread between where I'm wrong and I take my loss and the upside is so vast. The asymmetric upside at this point of the market is where I work my hardest, guys. Okay, because the juice is here, the mango juice is here, and this is where you want to capture it. It's not easy. This stage is difficult. Just like how this stage over here, guys, in 2019 was really difficult. Everybody was looking only for reasons to be bearish. Hey, guys, we're at 6K resistance. We're definitely going to dump. Let's pile on the shorts, right? And yeah, by all means, that was a massive, massive weekly resistance level. But remember what you look for in an uptrend. Once you determine that we are in the bull stages of a market, rising bull stage, and we have a weekly uptrend, well, if you have a weekly uptrend and you have your rising stage of the bull market, together, the combination should allow you to look for resistance to break, right? And if everyone was putting on shorts over here at 6K and your rules are telling you that I should be looking for a higher low and for resistance to break, well, all that short is going to be fuel for the impulsive move, the next impulsive move to the upside. That's exactly what we got, right? Because we were in bull market mode and we are looking for a weekly continuation of the uptrend, we got that upside. We could have been wrong. We could have been wrong, and we would have just got out of the market then, right? But because we put on the risk, because we uncomfortably put on the risk, we got the big win, right? All right, so let's go ahead and talk about the total crypto market cap chart on the weekly time frame. And the reason I'm bringing this up is because I only just started looking at it a little bit more carefully against the weekly dynamic, and oh my God, guys, this chart is so freaking clean. So freaking clean, right? If we had used this chart over here as a determination as to whether or not we are in a bull market phase or bear market phase, we would have done fantastic, because there hasn't been any chop whatsoever. Going all the way back to the COVID rally as well, guys. Okay, the COVID breakdown rather. We closed underneath, right? Retested it above, closed underneath, got a confirmation, and boom, big jump, trended, closed ever so slightly above, and then just held it the entire bull market. As long as you're above, you stay bullish. Now remember, guys, total crypto, total market cap, for those of you who don't know, is essentially the market cap of all your coins combined, right? So it's Bitcoin plus all your alts, okay? So it's a good representation of the trend of the entire market. And essentially, when you look at this, you can see that as long as you stayed above the weekly dynamic, you could have stayed bullish. Over here, close underneath, stay bearish this entire period over here, close ever so slightly, had your nice little up thrust, perfect retest, no chop, because I believe Bitcoin chopped around here, right? We closed slightly underneath, if I remember correctly, and then you had your continuation. And then, again, no chop whatsoever. It was only when we clean close underneath 2 candles, you had your long downtrend. And now we're closing above. Okay, so now that we're closing above, am I saying that, yeah, we're going to the moon just because we're above? No, I'm not saying that. What I'm saying is we can use this as a basis of our invalidation, because now we can be that much more confident when we are wrong about our thesis, right? Because how many times have you guys got invalidated on your trade, but you're scared. You're scared that, hey, I might be getting shook out of my trade. What if the market closes back above my level? Then I'm gonna have to get back in. No. I'm not gonna exit my trades. No. I'm not gonna exit my trade. Well, over here now, this is going to give you that much more confidence to start de-risking and exiting out of all of your trades if we start losing this level, if we start closing underneath the total crypto market cap weekly dynamic, right? And I'll update you guys on this. If you guys, again, if I fail to update you guys on this on the daily videos, go ahead and join the Discord and make sure that I post this chart regularly on the Discord as well. It's going to be a good way for us to keep an eye on the trend of the entire market. And at the moment, we're closing weekly candles above it, right? Closing weekly candles above the total crypto market cap weekly dynamic as well as the monthly 10 SMA. So together, those two are adding a lot of confidence and credence for us to be looking to buy those weekly high low dips on our coins. Another chart over here that I want to re-emphasize with you guys, and we brought this up I've been showing this chart to you guys for months, right? Before we got the confirmation on the stochastic bull cross, where we're essentially looking for the stocks to cross bullish while it is bottomed over here, right? Underneath the 20 zone. Each time Bitcoin has done that in the past, it has lined up with major macro rising bull markets, right? All the way since 2011 over here, you guys can see it happened, right? Got across, we start leading into the rising bull market. Remember, I draw a clear distinction between the parabolic run, like we had over here, like we had over there, and this one over here too, from around 10K to 60K. Big difference between a parabolic run and the rising bull market stage. Because in the rising bull market stage, you could very well have deep pullbacks, okay? And each one of these stochastic bull crosses has lined up with the beginning phases of a rising bull market, right? In 2019 as well, right over there. And now we just got one very, very recently. We have not uncrossed just yet. As soon as we get that uncross, right? As soon as we cross bearish again and we start going further towards the downside, we'd be like, okay, hey, we were wrong. But none of that has happened yet. We have the 10 SMA, on the monthly, as well as the monthly stochastics bull cross. So keep that at the back of your mind as well. I know we have conflicting signals. I know things are not clear cut. But again, remember what I said in my tweet, right? It is that discomfort, that difficulty that you're paying for the asymmetric returns, okay? I'm going to go ahead and talk about, right over here. So we talked about the monthly levels. I want to go ahead and show you guys a weekly chart over here now that is actually indicating further downside. And this is where things get a little bit more conflicting, because the weekly saying, hey, further downside, but the daily, I have a daily indicator that is basically saying that we may actually get picked up over here, right? And that's where the discomfort lies, even for me, because the weekly did not close all that well. We talked about a key level coming in from these candle closes over here and this weekly high over here. Well, this most recent weekly candle that we just closed unfortunately lost both those levels, and that's really ugly. I don't like that at all, right? We lost the weekly candle close. If you go ahead and zoom in, you're going to see that we close ever so slightly underneath that weekly candle, and that cannot be ignored. So we lost this weekly high that was rather important, as well as this weekly candle close over here at around 21,800, right? I think we closed at 21,780-ish, ever so slightly, but significant enough for me to take it seriously. Now, here's the thing. Usually, when you have a cascading pattern like this, right, that we've played multiple times in the past, you get a move like this to the upside, you hit your measured move, which was essentially hit for us perfectly at around $24,000. We hit our target, but you do see a pullback. Now, here's the thing. The ugly thing about these pullbacks is that they could be pretty freaking deep. Right? So we have to guard against that. If we lose this level over here, guys, we could be looking towards a deeper pullback, towards a maybe 20,000-ish level, 19,000-ish level. we'll come back to that. If we lose this, I'll do a video almost immediately and I'll give you guys the targets that I'm looking towards. But let me go ahead and show you guys my contradictory signals that's saying that we may get supported over here, and that's coming in from the daily dynamic right over here, guys. Every single one of these candles has been closing above the daily dynamic. And if you guys remember when we talked about 2019, the impulsive move on the weekly time frame, and then when we start consolidating, it was the daily dynamic that held price up. Okay, but the good thing about 2019's price action was that we had the 21 EMA that was above the daily dynamic that was being held as well. We were wicking onto the daily dynamic and closing above the daily 21 EMA. Over here, we're not doing that. Okay, over here we have lost the daily 21 EMA, which is coming in somewhere around there. We're holding the daily dynamic, but we lost the daily 21 EMA. So it's difficult. It's difficult. We've also lost the top of the daily dynamic, right? But we're holding the bottom, which is what we did in the last mark. So now the big question is, do we put more credence on the daily dynamic or the fact that we have lost our weekly level, right? Well, you could say that the weekly level, let's draw it out. The weekly level over here is bearish, right? The daily level over here is holding, right? So you should put more credence on the higher time frame, correct? Well, we also have a monthly level that is holding, right? We have the monthly 10 SMA that is holding. So we have the monthly 10 SMA that's holding. We have the weekly that has lost its level, and we have the daily that is holding. So these are most definitely conflicting signals. So if you want to put credence on the monthly 10 SMA and put on your trades based on the monthly 10 SMA, you have to position based on the monthly unfolding, because the monthly could wick down onto weekly levels, right? We could lose the daily dynamic, right, as well. And we could go all the way down, test the weekly levels, support it, and then close above the monthly 10 SMA anyways, right? So that's how I'm positioning, guys. I'm positioning for that, because as long as we are holding these monthly levels, I want to be exposed to the market. As long as we are holding even the crypto market cap on the weekly dynamic, I want to be exposed to the market, right? I want to have exposure to a potential asymmetrical run. I do not want to be closing out positions for a few percent over here, give and take, when I'm looking for the bigger wins at the moment, right? It's going to be painful. It's not going to be easy, but that's the cost I have to pay to be able to capture that upside. But I'm positioning my sizes accordingly as well. Use your risk management tools, guys. All of you, I implore you, use your Mango risk management indicator, use your Mango risk management tool sheet, document everything. Use Sherwin's trading journal, right? Just click the link on the dashboard that says my trading journal and use the tools given to you. Do not get lazy. I hope you guys enjoyed this video. I did want to go ahead and talk about some quick macro as well, but I'm going to leave that for tomorrow because we did cover a lot on today's video, and it is the start of the week. I don't want to overwhelm you guys. Again, leave your love down in the comment section. It has been keeping me going, keeping me regular. I'll see you guys in the next one. Ciao.